It's February 28th, the last day of February. It's JLD here, and welcome to MSTR Today in the Treasury Titans. Nothing in this video is financial advice as we head into the month of March. Michael Saylor says, better think digital. Now, yes, some things happened overnight internationally, specifically in Iran, and that's why you're seeing a little dip in the Bitcoin price for sure. So we'll see how those things flesh out over the weekend. But Bitcoin currently holding strong at 64,000 at the time of this recording. Where it's at the time you're watching this, nobody knows, but the merry-go-round continues to go round. And Michael Saylor wants us to know that it's probably nothing. And this is when he's referring to stretch. And here we have stretch just basically going in a flat line as Bitcoin falls 45%. I mean, if this does not prove everything of what stretch is meant to be and what stretch is, I don't know what is. Because as the yield went from 10.5 to 10.75 to 11 to 11.25, soon, in my opinion, to be 11.5. He'll probably announce that today, maybe even tomorrow. Man, it's just incredible to see what's happening in the world of stretch, especially when you're comparing it to the Bitcoin price. Essentially a zero vol as stretch is at 100 right now. Incredible stuff. And Rob says, probably nothing, but stretch redefines credit. MSTR Treasury then amplifies Bitcoin forever. Checkmate. Just waiting for the thesis to play out at this point. And I feel the exact same way as Rob. I'm just waiting for the thesis to play out. There's going to be all this noise. There's going to be micro wars, major wars, economic wars, real wars, inflation. There's going to be deflation. There's going to be rate cuts. There's going to be rate hikes. There's going to be stagflation. There's going to be political upheaval. There's going to be fill in the blank. Things are always going to be happening every single day, week, month, year. But what is going to happen here is inevitable. So we're just waiting for this thesis to play out. Not overnight, not over months, over time. So I'm with you, Rob, all the way. And Michael wants us to know that stretch closed at par, $100. He's very proud of this. This is his sole focus. This is his laser eyes. I mean, Michael Saylor wants two things. He wants to ATM stretch, and he wants to buy Bitcoin. I mean, let me actually maybe even expound upon that a little bit more. Michael Saylor wants to ATM stretch as much as possible every single day. So he wants stretch to be at 100 or, trying to push above that so he can ATM his face off. Then he wants to buy Bitcoin, and then he wants to hold Bitcoin. Not for a month, not for a year, but forever. If you have not seriously listened to Michael Saylor's keynote presentation, like really sat down and listened to it through, I've been playing clips of it recently, but that keynote is unbelievable. British Hodl actually did a great job of breaking down the entire keynote presentation. He actually plays the keynote presentation on his channel, but then pauses it at different times to talk about certain things as they go through, which I think, by the way, is a good idea. And if you think that'd be something interesting that you would like me to do at some point in the future, let me know in the comment section. Be like, JLD, yes, future Michael Saylor talks, go ahead, play them on your channel. Pause when you feel like there should be some things to be expound upon those things, and then move forward. If that's something you're interested in, of course, it'd be a very long video. I mean, this would be like a 45, to an hour plus video. But if that's something interesting to you, let me know in the comment section, because I want to make sure that I'm continuously bringing great content to you, my amazing listeners and viewers and subscribers. Rob says, Stretch ATM is getting activated. Watch for the quote-unquote market makers to nuke Bitcoin again to slow it down. Bitcoin must go down, or the unstoppable reflexive loop created by Stretch will take hold. This cannot be allowed. And of course, what Rob is just saying here is that people that are in the know, they know that once the Bitcoin sentiment shifts positive, once Bitcoin starts going positive, that stretch is going to be pegged at 100, and Michael Saylor is going to be ATMing his face off, and Michael Saylor is going to be buying a ton of Bitcoin every single day, which is going to be driving the Bitcoin price up, which is going to be this reflexive loop that Rob's talking about. It's inevitable. The bears are just trying to hold it off as long as possible. Zinc says, quite remarkable that Stretch has traded at par fairly consistently today, despite being more than 2 weeks away from the ex-dividend dates. I calculate it to be around 17.5 million raised today alone, which is enough for 270 Bitcoin. We are witnessing history bullish. Chris says, the reasonable man adapts himself to the world. The unreasonable one persists in trying to adapt the world to himself. Therefore, all progress depends on the unreasonable man. George Bernard Shaw on Michael Saylor's vision for digital credits. Loved it, Chris. Had to share it. Great quote and so true. Dan Hillary says, Stretch will drive the price of Bitcoin much higher terminally than people realize. Banks are taking notice. Yes, they are. Buck token for the win. Rajat says, why would you buy a rental property when you can earn 11.25% owning Stretch? And by the way, 11.25% ROC, return of capital. That's deferred taxes. And by the way, about to be 11.5% if you were to ask me. That's my guess. I think we'll hear about that soon. Adrian says, MSTR Stretch is slowly developing into a strong market narrative. I get questions about it daily. This is not a drill. And it's not a drill, my friends. A lot of things are happening around the world. I am praying for the safety of those who are in danger. And let's just say that Bitcoin will march on. We have a great clip from Michael Saylor coming up as soon as we get back from thanking our sponsors. Scams and identity theft do not start with hackers. They start with your personal data being easy to find online. Your home address, phone number, and employment history can be sitting on dozens of websites right now, waiting to be used for fake loans, targeted scams, or worse. That information is spread across people's search pages, shady directories, and commercial databases you've never even heard of. That's where Incogni comes in. Instead of spending hundreds of hours manually opting out of these sites, Incogni automates the entire process. They hunt down your data and demand its removal. Incogni doesn't just do this once. They continuously monitor these sites in the background to make sure your data doesn't reappear. I recommend the unlimited plan because when something isn't covered automatically, Incogni's custom removals feature lets you send in a specific link and a dedicated privacy expert takes care of the manual removal for you, start to finish. Remember, if they can't find you, they can't use your data against you. Take your data back risk-free with Incogni's 30-day money-back guarantee. Use code MSTR for 60% off an annual plan at incogni.com/MSTR. That's INCOGNI.com/MSTR. When you want more, start your business with Northwest Registered Agent and get access to thousands of free guides, tools, and legal forms to help you launch and protect your business all in one place. Build your complete business identity with Northwest today. Northwest Registered Agent has been helping small business owners and entrepreneurs launch and grow businesses for nearly 30 years. They are the largest registered agent and LLC service in the U.S. with over 1,500 corporate guides, real people who know your local laws and can help you in your business every step of the way. Build your business identity fast with resources, forms, and step-by-step guides even before creating an account. Sign up to manage your business hub with lawyer-drafted documents. Northwest is your one-stop resource, makes life easy, and keeps privacy automatic, never selling data anywhere. Don't wait. Protect your privacy, build your brand, and get your complete business identity in just 10 clicks and 10 minutes. Visit www.northwestregisteredagent.com/JLD free and start building something amazing. Get more with Northwest Registered Agent at www.northwestregisteredagent.com/JLD free.
And that takes us to the question of what's really going on here. It's signal processing. Okay, digital capital is highly volatile, growing at a rate. If you look at that chart, that orange line kind of looks like the Bitcoin price chart if you've looked at it over the past 10 years. It's doing this. The credit line is what most people want. People don't want to get rich suddenly in the distant future, unexpectedly after a roller coaster ride. What they want is to get risk steadily with very, very low volatility, no anxiety. They don't want the fighter jet. They want the jumbo jet airliner, and they want to recline in first class while they go to their destination. So digital credit is just stripping out that smooth 11% out of that very volatile 30%. Now, where does the excess volatility go? There's a conservation of energy, conservation of volatility. So if you want to take a 30% roller coaster ride and strip it down to 11% jumbo jet luxury ride, then you have to put the volatility somewhere else. So what you can see is the excess volatility goes to common equity. And what I've just shown you is basically digital equity, digital capital, digital credit is clearly digital stack. It's changing every 15 seconds. In our case, the equity is MSTR. It's up 52% ARR. The capital is Bitcoin. We expect to be up 30%. The credit is the STRC. Now, what's the highest yield you can pay on digital credit? Well, if you expected 30%, then you have to plug in the collateral coverage. What's the BTC rating? What's the duration? What's the volatility? Once you plug in your assumptions, what pops out is, well, in this case, I can pay 15% and still stay investment grade on that assumption set. You go up to 23% and you're still in high yield. But there is an envelope of dividends you can pay out, or a dividend ratio you can pay out, that's just a function of the volatility and the performance of the underlying capital asset. So what's this chart show? This chart shows if you're a skeptic and you think Bitcoin's going up zero, there's a very small amount of credit you can create. And most of it is low dividend yielding. And, you know, a little bit of it is 5 to 10%. And a very small amount is more than 10%. If you think Bitcoin's going up 10% a year like the S&P, you see you can issue a lot more credit and you can have a bit more flexibility on the dividends. As your view of the capital asset, whether it's gold or Bitcoin or real estate or the S&P or whatever, as your view of that improves, as you think it's going to improve over time, your ability to issue credit and higher yielding credit is enhanced. And you can see what's going on here. If you're a bull and you think Bitcoin's going up 30% a year, you can see you can issue quite a lot of high yielding credit that is investment grade. That's the big idea here if you're staring at this. And of course, if you think about high yield, right, you're willing to accept a slightly higher risk instrument, then you can create a lot more credit. You can create exceptional amounts of credit if you think Bitcoin's going to appreciate faster than the S&P. And of course, if you're a Bitcoin bull, you can see you can issue monstrous amounts of credit, even 1x collateralized at this level, right? And so the amount of credit you can create is really a function of those variables. Now, so how risky is STRC? What is stretch? Well, I put it on the chart. If you're a Bitcoin skeptic and you think Bitcoin's going up zero, it looks like distressed debt. If you think Bitcoin's, you know, a 10% grower, it's almost high yield. It's like kind of suboptimal high yield. But then as you start to have a better view of Bitcoin, it starts to float into the high yield. And then, of course, if you're a Bitcoin bull, it's investment grade. And so what I've laid out here, we call the theory of digital credit, but really it's just the theory of asset-backed credit. You could do the same exercise with the S&P index, Mag 7 stocks, you know, NVIDIA stock, gold, real estate. Now, why haven't people? Well, because the Investment Company Act of 1940 prevents you from levering or capitalizing a publicly traded company on equity portfolio or securities. So no one does this in the public market on securities. You'd have to go to gold or real estate, and the performance in gold and real estate has just been not compelling enough to be worth the trouble. Bitcoin is the first time when you have a non-security asset which is outperforming the S&P where it's worth the trouble. And that takes us to the question of, well, what's the performance of this stuff anyway? What's the second best? There is no second best.